Hey guys, today is Saturday, February 22nd of 2020. Welcome to Backstage with Millionaires. As always, I'm Caleb, your host, and today we're going to be talking about some of the latest startup news that's been happening in India over the course of the last week. And as always, there's a lot to cover, so let's jump right in. First up in the news, Quikr, one of India's largest online classified platforms, has lost its unicorn status as its valuation has dropped by more than 40%. So this is coming after one of the company's investors, Kinnevik AB, revised its investment valuation in the company. Kinnevik AB holds 70% of Quikr, and after they made this revision, Quikr went from being valued at $1 billion to being valued at $570 million. And the reason that this is happening is that, according to a blog post from Quikr, some of its employees had colluded with other market players and engaged in unethical practices on the platform. You can read the full blog post on their website, and we'll be leaving a link to that in the description of this video. So according to Kinnevik AB's report, these unethical practices seem to be the reason behind the increase in the number of transactions on the platform and the revenue boost that the company has received. And unfortunately, the revenue that's come as a result of these fictitious transactions may never be recovered. And just to put Quikr's finances into perspective here, during the financial year 2019, Quikr's net revenue from operations, that's the revenue generated from core business activities, rose by 75% to 191 crores, or 1.91 billion rupees, from 109 crores, or 1.09 billion rupees during the financial year 2018. And I hope that Quikr is able to get things back on track. God knows that they've been through plenty of challenges in the past, so hopefully they can use some of the learnings that they've acquired over the years in building and scaling the company and overcoming some of the challenges that they faced in the past to overcome this new challenge, the largest challenge they've ever faced as a company. All right, next up in the news, OYO has disclosed its financials for the financial year 2019. And long story short, its revenues have gone up as well as its losses. To be more specific, its revenues have risen by more than 4x from $211 million in financial year 2018 to $951 million in financial year 2019. On the flip side, OYO is looking to become profitable and is aiming for an IPO, and so their losses have reflected that. In financial year 2018, their losses were $52 million, but in financial year 2019, this number has increased by more than 6x to $335 million. OYO is attributing this loss in large part to its aggressive expansion in China, which has been significantly hindered by the outbreak of the coronavirus. That being said, OYO has managed to cut back on losses within India. In financial year 2018, OYO's losses in India were 23.8%, but in financial year 2019, these losses have dropped to 13.8%. Not only that, but they've also managed to triple their revenue in India to $604 million. Needless to say, the last couple of months of the OYO story have been very interesting. There have been allegations of rape, unethical business practices, hotels have left the OYO platform, customers have been boycotting the platform, and also now this recent round of mass firings both in India, China, as well as the United States. All right, let's take a break from this doom and gloom and talk about something a little bit more positive. Paytm Wholesale Commerce, which is a trading house and a subsidiary of Paytm Mall, is partnering with buyers and suppliers to bring Indian products to markets like Southeast Asia, the Middle East, Africa, and the United States. In doing this, Paytm is aiming to become the largest gateway for global consumers to buy made in India products. They're looking to sell products worth 500 crores, that's 5 billion rupees, in the first 2 years of operations. Now, it goes without saying that this is very good news for Indian exporters, as they'll be able to leverage this opportunity to find consumers in new markets and boost their earnings. As the company is specifically focusing on agricultural products like rice, spices, tea, organic food, fresh fruits, and vegetables, this will also provide an opportunity for Indian farmers to raise their incomes. As of today, the agricultural sector accounts for less than 12% of total exports in India. And so an initiative like this will not only support Indian exporters and farmers, but it'll also help India to achieve its agricultural export target of $60 billion by 2022. All right, next up in the news, India's largest online insurance aggregator, Policybazaar, has appointed Sarbvir Singh as the company's new CEO. The company's previous CEO, Yashish Daya, is settling into the role of Group CEO for Policybazaar's parent company, eTech Aces. And just to give you guys a bit of context here, eTech Aces Group consists of Policybazaar, Paytm, and DocPrime, and Sarbvir Singh is a former venture capital investor who previously had been the managing partner at Blume Ventures. In his new role, Sarbvir Singh will be responsible for the day-to-day operations of Policybazaar and will report directly to Yashish Daya, who will take a more strategic role in the group and focus on mentoring. And for those of you who don't know much about Policybazaar, the company was founded by Yashish Daya, Alok Bansal, and Avanish Nirjar in 2008 and has already been growing at a rate of 100% year on year and sells more than 400,000 policies every single month. All right, moving on to some funding news. Swiggy has raised $113 million from Process Ventures, Meituan Dianping, and Wellington Management. It's expected that these latest funds will be used to expand new business categories like cloud kitchens and also help Swiggy to leverage its network to deliver products apart from food, as the startup stays focused on profitability. Expansion into new businesses seems like a pretty good decision for Swiggy, as it's already competing with Zomato in the online food delivery market. Besides that, Zomato has also recently acquired Uber Eats, which will further intensify the battle for customer acquisition. Now, I do hope that this competition continues to benefit us, the consumers, but with only 2 players competing in this space, and with Indian consumers getting very used to ordering food online, it's likely that Zomato and Swiggy will start to cut back on their discounts in order to generate more profits. Next up in the news, Unacademy has raised $110 million in a Series E round from investors like Facebook, General Atlantic, Sequoia Capital India, Nexus Venture Partners, Blume Ventures, Flipkart CEO Kalyan Krishnamurthy, and Udaan co-founder Sujit Kumar. And this latest funding round now values the startup at $510 million, which means that Unacademy is a little over halfway to becoming a unicorn. With this fresh capital, it's expected that Unacademy will be adding more competitive exams on the platform and also investing in onboarding top educators to further enhance the quality of their content. And it's really no surprise that edtech startups in India are continuing to raise huge amounts of funds, as India's online education market is expanding rapidly. In the previous week alone, Byju's and Vedantu raised $200 million and $24 million respectively. All right, next up in the funding news, Indian VC firm Blume Ventures has closed its 3rd fund at $102 million. This is noteworthy because this is the first time that an Indian VC firm has raised more than $100 million for a single fund. With this fund, Blume Ventures will be investing in 25 to 30 early stage startups with ticket sizes ranging from $500,000 to $1.25 million. Apart from that, they'll also be picking up winner companies that will be receiving $3 to $5 million. In the past, Blume Ventures has made successful investments into companies like Unacademy, Healthify Me, and Dunzo. And speaking of Dunzo, they actually raised $11 million in debt funding this week from Alteria Capital. With these funds, Dunzo will continue to focus on building a sustainable business model as it looks for profitable markets. So far, Dunzo has raised a total of $89.6 million across multiple funding rounds from investors like Google, Lightbox, and STIC Ventures. Founded by Kabir Biswas, Mukund Jha, Dalvir Suri, and Ankar Agarwal in 2015, Dunzo offers hyper-local delivery services across 9 Indian cities, including Bangalore, Mumbai, Delhi NCR, and Hyderabad. Being a hyper-local delivery startup, Dunzo claims to make deliveries in under 30 minutes on average. The startup has also managed to clock 2 million transactions, and its quality service has enabled it to retain 80 to 85% of its customers. And the last piece of funding news that I have for you guys today is that after-sales service provider Onsitego has raised $19 million in a Series B round from Accel and Zodius Growth Fund. Founded by IIM Bangalore alumnus Kunal Mahipal in 2010, Onsitego offers a platform that helps customers to extend the life of their electronic products by providing extended warranty plans which cover repair and maintenance of their products at affordable prices and in a hassle-free manner. These latest funds will be used by the startup to consolidate its position in the device protection market and expand its categories like annual maintenance contract, home protection, and on-demand services. All right, that is all the Indian startup news that I have for you guys this week. I hope you enjoyed the video. And as always, I would love it if you could leave a comment down below about any of the topics that we explored today. For example, what are your thoughts on Quikr and the really unfortunate situation that the company has found itself in today with this 40% devaluation? Or on a lighter note, Paytm Wholesale Commerce and the awesome opportunity that they're giving to Indian exporters to access global markets. Let me know in the comments down below. We always love to hear back from you guys, and also would love it if you could share this video with anybody that you think would enjoy it. Thanks so much for watching this episode, guys, and I will see you in the next one.